Effective 9 July.
They didn't move rates. They have not moved rates.
They have not moved the cash rate.
They have not moved the cash rate. So there you go. That is going to create quite a movement.
Wowee.
So they have gone against 88% of economists, 95% of the market pricing, and have held the cash rate at
You only get one of these. I reckon you get about one of these a decade.
Yeah.
You know, where this is coming in.
So scroll to the bottom, because the other thing that's happened for the first time in this meeting is we get to know the votes and who voted for what. It was done at 6-3. So 6 voted in holding, 3 against the current motion. Now, what we don't know
is who,
is not just who, against what. So we know that the majority voted in favour of retaining the board's position at 3.85%. Did those 3 vote for cuts, or did those 3 vote for something else? And that's the other thing that I think will come about this. But that is going to catch a lot of people and the market off guard. But we did speak about this in the 20 minutes lead up, is it was going to be off brand. It was going to be off the communication around what they had said, that basically they need all of the data and the data conservative viewpoint to align with where they're at. Again, what I now want to talk about, because this is thrown us slightly, is that we were talking off air before we came on about what the banks are actually seeing from us, from you guys out there watching and doing, is that outside of those that do it automatically and independently of you as mortgage holders, if you listen to it, you know, CBA, NAB, ANZ, etc., have been telling us that only 1 in 10 have actually called up the banks and moved their repayments to the minimum monthly repayment, which suggests that either 2 things. 1, we're lazy, possibly, but I would take the other option, which is we are trying to therefore take more money off the table from the actual loan debt that we have with the lower interest repayments. The other thing to talk about that we didn't get to talk about before, and that might be also into this, is there is growing suggestions that the cost of living crisis is over. And that maybe if we start reading really, really line by line into that, is that pressure, that 50 basis points, the fact that people are banking it, savings ratios are starting to move up, which is what they're talking about in the statement on screen, that we are getting to a point where the crisis, and I would argue this, it's still there, the pressure is lower. I mean, prices haven't declined, as Ben read out before. They're just not growing at the same rate. We have disinflation, inflation, but not at the same level it was this time last year. We don't have deflation. And so for me, all of that put together is sort of what we're reading on screen, which is that, and I can see it's all written over your face, and I agree with you, it's confusing.
Okay, so I get my quarterly inflation data come end of July, right? So, and let's say it's confirmed that it's still within the band, right? So which is currently where it is. Look, the only thing I can think of is they're trying to do something else. I'm trying to work out what it is. Like, obviously, full employment or strong employment is still there, but I'm also interested in terms of, are they concerned about the housing market? Because obviously this will put a little bit of a pause in the housing market, because we could have been off to the races, right?
Maybe take that first line there of maintaining price stability and full employment. So the board continues to judge that the risks to inflation have become more balanced and the labour market remains strong. So this is probably that inflection point, is that inflation is now at a level that they're more comfortable with, but they are therefore still very aware that there is strong employment.
Yes.
And therefore are cautious about the outlook around, you know, possible increases in aggregate demand.
There is also lag data, and ultimately this takes 6 to 9 months for it actually to flow through. This, if it was 25 basis points, on that point, and you're bang on, I'm with you on this. Technically, the February rate cut is only just taking effect. Correct.
Now.
And so are they worried that they were going to supercharge or get a spike in inflation? I mean, I suppose the tariff story is something. Uncertainty in the world economy remains elevated. Okay, whilst the final scope of US tariffs and policy responses in other countries remain unknown, financial market prices have rebounded okay, well, the equity markets have definitely been performing
But again,
incredibly strongly.
The reason they've performed is because the Liberation Day tariffs were paused for 90 days.
Yeah,
and
trade
so
policy.
if you look at the April 8th low to where we are now, US markets are up 25% after falling 16.5%.
So are they pumping the brakes? Are they thinking that we were potentially going to be off to the races?
So maybe. I mean, again, the future intentions and the consumer confidence data, which we'll get to in a minute once we get over this dumbfounding decision, is that we have a scenario where confidence 12 months in advance is actually on the way up, right? So time to buy a house is getting slightly higher. Price expectations around housing was going to the highest level that we'd probably ever seen.
Why surprise the markets? What do I benefit from?
Yeah,
the only thing I can think of,
I need to look at the markets while we do this.
The only thing that I can think of is that, she was worried about basically, setting inflation expectations at a higher level rather than killing the inflation beast. So she potentially, and the board potentially want to make sure.
So just to sort of point it out, like what it's done is like it's caused the dollar to rip higher by 0.5%.
Bang!
Like that's incredible. So it's now trading at, it got to as high as 65.5 after trading at 65 on the nose at the number. You then also look at what's going on in the equity market. The ASX has fallen, as I speak, over 30 points. It was up. Now it's actually down. So it was up over 15.5 points. It's now down 16 points since that. So that is...
the credibility now. This is probably...
Well, so this is the question, right, that we're asking. Was this the credibility that they were talking about, which was the data dependency isn't clear enough for us to do that? Everybody got excited over the monthly figures and away we went.
But it contradicts the minutes of the last meeting, which is a 25 and only a 25 and a 50 basis points cut was considered at that meeting. And here we are thinking that, we've slayed the inflation beast, but there's still more to be done there. And so it's really clear in terms of looking forward that the RBA are very mindful of a tight labour market. They're very mindful of potentially the risk of wages growth getting beyond where they want it to be in terms of, and that bakes in the risk of higher inflation for longer. So there's upside risk in that. The weak productivity, I hope Michelle Bullock comes out and I hope she says this has all got to do with productivity. In terms of, I want her to say that we need to fix productivity. If you fix productivity, then I know inflation is completely then done, and then we can be off to the races in terms of bringing the cash rate lower.